This video chart presentation is Sirius XM Radio. It's a NASDAQ listed stock trading under ticker SIRI. It's a 9-month chart. You can see Sirius has been on a real nice climb, strong upward trend. Really had kind of a rough week last week with 4 straight red days. And kind of like the indexes in general. Strong move on Thursday and Friday. Recovered most of the losses from last week. But what I noticed about it is the bounce off the 50-day moving average. Now I want to see if this upward trend is going to continue, try and break through and make some new highs, and strengthen this overall upward path. Now we're not going to get a lot from these indicators because there was 4 straight down days, which as it happens is always healthy for a chart anyways. Now I'm just going to look for hints for a rotation and a possible move to the upward side again. You can see the MACD did dive off. Over the last couple days, histogram bars moving back towards zero. All I really look for is holding around the zero mark and dropping another bullish cross to show the upward trend is going to continue. Pretty neutral look to the ADX right now. Remember, the ADX doesn't tell you what direction, it only tells you the strength of the direction. And you try and glean a little bit from these positive and negative DIs to show what the pressure is to the upward or downward side. Right now, though, all three close right around 25, 26. That's a pretty neutral reading. I like the MFI starting to turn. Again, all three components pretty close together and trying to push their way back through 50. It's a bullish sign for the indicator to be trending on the upper half like that. See down through here, just make a point. When the money flow index was basically on the lower side, see this chart was really just trending sideways. Nothing too bullish about it is the point. You want to see it on the upper half, show that people are paying higher prices for the stock, and that's a bullish indication. Accumulation distribution, trying to make some higher lows, seeing that there is some buying going on in the chart. Chaikin money flow, which is based on the accumulation distribution, gives a little bit of a different read, just slightly over zero, saying over the last 20 periods, buying pressure is outweighing selling pressure. CCI dove off hard, but is reversing course. As I always like to point out, the official buy signal per the rules of the CCI is the break of 100. So that still has a little ways to go, but bottom feeders will use the break of negative 100 as a buy point, and use it almost inversely. It would be a hold unless it breaks back down through negative 100. Full stow was over top of 80. A lot of selling pressure came in. The sharp dive like that just tells me all the momentum came out of the play. Now I'm looking for the momentum, of course, to build the other direction, and I want to see it hold over top of 50. The tricks, the lagging indicator of trend. Ultimately, what I use the tricks for is just to look for overall uptrends. I don't try and use crosses as buy or sell signals because generally speaking, they come a little bit too late. The MACD does a far better job of bullish crosses to gauge trend moves. But the tricks is good to use for overall trends because it eliminates all kinds of volatility in the chart. RSIs, pushed back through 50. Again, that's a positive sign of bullish momentum in the play. Now what I want to point out is that's a pretty key area of support right around 325. 50-day moving average ties in with it, lends dynamic support to a static support point. See, that was a tough spot of resistance, so it was a primary area for it to break through. And in classic TA fashion, once that resistance is broken, it should turn into support. That's exactly what it did. So any further pullbacks, it would really have to hold that area for me because I don't see another area of main support until back down around 295. So it's a pretty good drop from that point to the next level of support. So I'd have my eye peeled for that area to hold. And to the upside, the resistance comes in at the old highs at 362.5. On the whole, Sirius is a pretty heavily traded stock. There's a ton of shares outstanding. You see it traded almost 67 million shares on Friday. And that's probably just a little bit more than average for it. It always trades heavily. It's a pretty popular stock. It's not prone to make huge moves. This is a 2, 3, 4% type of play. It would be a pretty sizable move for it on any given day. So to that extent, it is a little bit of a safer play, so to speak, because it doesn't generally make real volatile moves, and it does have plenty of liquidity to get in and out of the play based upon breaking support and resistance levels. All in all, though, it's made a real nice move, still trending above the 50 and 200-day moving averages, indicating the chart's remaining bullish, and because it held that support level last week, I think it's one to keep an eye on going forward, see if it's going to break through and make some new higher highs. But as always, it's merely my interpretation of the Sirius chart. Thank you for watching, and trade smart.